Thanks for clicking. We had an interesting week in China news this week with the People's Bank of China, China's central bank, doubling down on last week's announcement that China would be bailing out its real estate sector, calling on the banks to stabilize lending to property developers. Yes! Speaking of developers, while we talked last week about China unveiling their 16-point plan to bail out the real estate industry, criticism has grown that the country is not out of the woods just yet, with some analysts noting that it will take a lot more than money to restore the property market. And part of the problem with the real estate market is China's continual insistence on its zero-COVID policies, which were on full display this week as millions were locked down in Guangzhou, leading to further concerns about the state and the future of the Chinese economy. So what I want to do today is go over the PBOC's instructions to the banks to get lending, discuss some of the criticisms of Beijing's real estate bailout plan, and then go over their ongoing zero-COVID strategy. As we'll see in a minute, though we talked last week about China's plan potentially being the end of the real estate crisis, it's not quite that simple, especially with the zero-COVID policies locking down over 20% of China's economy. We'll obviously have updates out on China's real estate and growing economic problems on this channel every Friday. Click like and subscribe to get those updates, but for now, let's get into this bailout. As mentioned, the People's Bank of China, the PBOC, has instructed its banks to maintain stable property financing. And by stable property financing, Beijing means extending some of the loans that are coming due. According to a message on the PBOC's website, the central bank is encouraging the reasonable extensions of existing real estate loans and trust loans. The move by Beijing is a sharp departure from the tightness that has characterized China's policy towards its real estate sector for over the past year, a tightness that probably triggered the current crisis.
An accident.
And will no doubt be welcome news for an industry that has $292 billion in outstanding loans coming due over the next year. According to a source quoted by Reuters, if a company has a loan coming due within the next 6 months, real estate companies will be allowed to defer payment for up to a year. And while this certainly doesn't fix the problem of the amount of debt being held by real estate developers, it does provide them some breathing room. It allows them to kick the can down the road a little further.
Invitation to form of flattery.
Yet, despite the easing from the PBOC and the 16-point plan to bail out the industry, analysts are raising concerns that we shouldn't expect China to turn around overnight. Hong Kong-based analyst Samuel Wee from Fitch Ratings says the moves by Beijing to bail out the real estate sector will give the property developers some breathing room, some temporary liquidity relief, but doesn't represent a fundamental turnaround. Though we talked last week about Chinese property stocks surging on the news of the bailout, Hui points to the fundamental problem that homebuyers' confidence will be key to restoring the property market. It's not so much a money problem, well it is, but it's also a confidence problem. Homebuyers don't want to buy the homes if they don't think those homes will get built. Less homebuyers buying homes, less liquidity, less money for real estate developers. Shangming Jing, I butchered that, an analyst at Nahua Research Institute, said it's a case of strong expectations but weak reality. And the real test will be whether or not these real estate developers, armed with this new liquidity, armed with the extensions of these loans, will be able to get their pre-sold apartments, those that sparked the mortgage boycotts, completed by spring. If the developers can get some of these pre-sold apartments completed, some of these apartments completed that homebuyers have been waiting for and paying for, then this would go a long way to restoring homebuyer confidence throughout China. But the confidence of homebuyers is certainly not going to be helped by the continual lockdowns occurring throughout China. Lockdowns which are currently hampering about 20% of Chinese economic development.
20% of China's economy is currently being affected by restrictions. Even though we aren't seeing citywide lockdowns being ordered, about 48 cities are subject to some form of district-level or widespread movement restrictions, and local authorities in big cities have also reintroduced measures like expanded testing and closing schools and offices.
And we're starting to see continual videos of Chinese protests over these lockdowns emerging throughout the country, with the latest showing a violent protest coming out of an iPhone factory in Guangzhou just this week. And China's current bout with zero COVID is not slowing down. In fact, it's heating up, with some say that China is heading back to where it was in April, with large, mass-scale lockdowns with over 20% of its GDP affected. And as long as China is under rolling lockdowns with 20% or over of its GDP affected for the foreseeable future, it's not clear that, despite all of the efforts coming from the PBOC, coming from the government to bail out the sector, it's not clear that homebuyer confidence is going to return to the market anytime soon. If you were a homebuyer and you knew you could get locked down at any point in time, would you be jumping into the real estate market?
That's the best time.
So this week, we saw the PBOC doubling down on the real estate bailout, instructing the banks to get lending, instructing the banks to extend the loans that are coming due. We also see some cracks in this bailout plan, as analysts are pointing to what we talked about last week, that the real issue is homebuyer confidence in the market. And as we just talked about, so long as zero COVID remains the law of the land for the foreseeable future, it's not clear that that confidence in the market is coming back anytime soon. With that said, we will continue to track China's real estate and economic crisis on this channel every Friday. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.